Hello everyone. Today it's the 10th. Oh, it's 10:12 in Kyiv, June 19th. And this is a review of the S&P 500 index for the private channel. Let's start with the highest time frames. Here we have the monthly candles. Let's expand them to full screen. So what do we observe here? And this matters. First we observe, I'm just thinking about how to arrange everything so it all fits. We observe firstly, let me grab the brush. Right here, there's a cluster of signals. They're called Y. There are also O signals. Yes, there are a few of them because we still lack those yellow and orange ones. These are called super warning, unis, and so on. So when we had this kind of group of signals, what happened as a result? A decline occurred. Look here, we had a group of signals, right? We had a decline here and a decline here as well. Moreover, the decline went lower than any of these signals. So here is the level to which we fell, and here it was even lower. Well, let me switch over now. There, I moved it. It was lower than any of these signals, even if you take the candle's minimum. The same applies in this area. Look here, there was a group of signals here, right? The lowest of them was here. Here it goes down, yes. And it ended here. In fact, well, I don't know. Maybe the next candle played a role there. Yes, by the way, it did, because look, the next candle came all the way down here, right here. So basically, all these signals have been worked out. Now, there's a nuance here. All these signals are homogeneous. That is, they come from a single indicator. But here, the signals came from different indicators. Therefore, it's premature to conclude that the market will fall. But note that if we remove all my markings, all my drawings, we see the following. I won't even remove the indicators. No, we'll need the indicators. Look, here, according to the overbought, oversold indicator, the highs were in one place, but now they're at a lower level. At the same time, if we stretch all this out, well, not quite like that, we'll see that the index highs here were in the region of 7,000 points. And at lower values of the overbought, oversold indicator highs, the index highs are already around 7,650 points. This is a significant and noticeable divergence, but it will become an actual one. Right now, it's just a theoretical divergence. When we get this specific kind of market break, that is, when the indicator starts to turn downward, then it will be a divergence on a monthly scale. And this divergence has clearly defined targets. Here it is, the first downside target. Yes, it's around 6,000 points. Well, I called it 6,100, 5,900. And there are even lower targets. Here they are, two of them, the pink and yellow zones. We don't touch these because they've already been reached here when the candle dropped into this area. So there are even lower targets down to the level of 4,000 points and also 4,400, 4,500. Let's put it that way. But the nearest one is in the 6,000 area, 5,900, 6,100. For now, this scenario looks theoretical. Did I say why? Because we don't have signals from other indicators and we don't have a downward break in the PP indicator. But there are prerequisites for a decline. We have an unfulfilled target. We have this according to the Y indicator, yes. Well, here's a bunch of these Cyrillic letter Ys. I might translate this video into other languages. That's it. But for now, this is not a short, not yet a short. The key event will be a break in this indicator, yes. And most likely at this break, signals from other indicators will appear. Next. And most importantly, it's the engulfing of this May candle, unless we see the June candle turn green. That's all. Now we move on to the weekly candles, and we already know what to pay attention to. That is, the stock market is now walking along the edge of a precipice. And here, look, on the weekly candles, the situation is exactly the one I would like to see on the monthly time frame for a full-fledged reversal. What does this mean? Take a look. This is what we've already talked about. Here is a whole group of signals, right? Well, first of all, after the first group, if you can divide them into two subgroups, there was a deep decline here, then there was basically a single signal, then another one, and then yet another one. But in the end, we caught up with all of them, right, when lower. I removed this one for some reason. We went lower than this signal and this one, right? Then look at what happens. Here is the first group of signals. The market ignored them. The second group isn't very big. The market responded to them. Here was the low. Here is where we went. But now, pay attention, there is a third group, and it is, in fact, still ongoing. Yes, you could say that it was to some extent worked out by the decline into this area, but we have an untraded zone. Here it is in gray. We still have the same potential divergence, yes, according to the overbought, oversold indicator. Notice that this week we have not updated the index high, meaning the historical high of the S&P 500 index has not been surpassed. And as soon as we do update it, we can talk about a divergence, at least a potential one. For now, it hasn't happened yet. It's brewing, but it hasn't occurred even simply because that high, which was set during the week of June 1st, hasn't been updated. That's it. But even without this update, what can we formally say? Actually, I was mistaken. The update already happened. It was last week. Take a look. So if we now mark the level of the previous all-time high, look, here it is. So here's the next all-time high, the one that was set last week. It surpassed the previous one. It was 7,632, and now it's 7,648. And in fact, as soon as we see a downturn here again, or as soon as we see a bearish engulfing pattern on the weekly candles of the S&P 500 index, that will be a signal for further decline. We have targets for this signal. Well, let's put it this way. We don't currently have mathematical targets in the form of these orange and pink rectangles, but they may form. But at the very least, we have a target, this untraded zone here, which is around 7,000 points. This is according to the weekly candles. And now, if we remove all my drawings, in other words, delete drawings, yes, then we can notice that, look, on the weekly candles, the index broke through everything and moved toward the 200-week line. Then it broke through, tested the 50 and 100-week lines. Then again, the 50 and 100-week lines approached the 200-week line. And accordingly, where can we expect a decline? Well, at the very least, to the 100-week line, that's 6,400 points. After that, it could be the 200-week line, 5,500 points. It's trending upward because, it will take time. So while it's at 5,400 now, over time it will be a bit higher, like 5,500, 5,600. But it could also be significantly lower, for example, down to the 300-week line, which is already 5,000 points. In other words, the weekly candles clearly indicate that making any purchases here is absolutely out of the question. That's it. Just like you shouldn't have made any purchases in this entire area. Pay attention, that's what I'm talking about. Look, I'll remove the magnet now. Here, signals appeared, but they were not fully realized. Then there were more signals and more signals after that. But then the decline was such that we broke through all these zones, all of them, with a much deeper correction. And accordingly, here as well, look, signals, signals, signals. Yes, the market was going up, reaching new all-time highs, but then where did it go? It went below even the zone of the very first signals, which you could say were both realized and not realized, right? And now look, here is the zone of signals that were basically not realized. Well, yes, there was some kind of correction here, yes. We may have even updated the lows, but after that, an even stronger cluster appeared. And this suggests that we are likely to see a decline even below this area, and possibly below this area as well. And by the way, the target for the decline, the pink one, has not been reached. I'll show it to you up close now. We got close to it but didn't reach it. And that's 6,350 points. 6,160, 170, something like that. So the stock market is on the verge of a major decline. I'm not going to call it a grand crash, but excuse me, let's take a look at the price changes. Well, even from current levels, just dropping to the area of the 100-week moving average would mean a 15 to 16% decline. And if it goes down to the 300-week area, that's already a 33% drop. So that's a lot, right? In order to make up for that drop, the market would then have to grow by 50% or 1.5 times. Basically, a 33% drop means the value falls by 1.5 times. So definitely no buying at all. And accordingly, this can to some extent explain the current decline in the cryptocurrency market as a risk market, a market of risky financial instruments. And knowledgeable people exit risky financial instruments first before the decline spreads to less risky ones in the stock market. Because if we see such a decline in the stock market, the cryptocurrency market could show an even deeper drop than what we are already witnessing. And accordingly, Bitcoin at $40,000, as you can see, is entirely realistic, and it could even go significantly lower. Because 33% for Bitcoin from current levels, let me switch to Bitcoin, let me switch there. Yes, let's look at the monthly candles. Here are the same charts, but for Bitcoin. First of all, we have a target in the range of 33,600 to 41,300, right? And secondly, let's do the same here and just lay out a proportional 33%. Where does that 33% take us? It takes us exactly into the target zone. Well, here it turned out to be 34%, yes. That's the area of $41,000 to $42,000. And we also have here a very old untraded zone from 2024. This is the area around 30,000. Well, if we take it as a range, it's 32.5 to 29,000. Yes. And we also have somewhere here. Oh no, it's not here. We need to use the chart from another exchange, Bitstamp, because we need a longer historical one. There, I think, we still have an unrealized downside target from 2017. Here it is. In 2018, not in 2020, sorry. Here we have the area around $5,000. Pay attention, 5,000. I'm not claiming anything. And here's something else. But we just looked at this. There's 37, there's 38, and so on. I'm not claiming anything, especially since, look, it's not like we're definitely going to fall all the way to 5. Still, keep it in mind. We have strong oversold conditions, even for Bitcoin, but even if we just take the current level of oversold and mark it with a horizontal line, look at how Bitcoin behaved, how much it dropped, right? Look, here was an oversold condition, and we'll even mark it with horizontal lines. Look, here was an oversold condition, roughly at the current levels. Here it was. I'm even taking a more extreme value at the current levels. Here it's even lower than the current ones. And now let's see how much Bitcoin dropped, right? Despite such strong oversold conditions on the monthly candles. Here we take from, we won't even take from the closing point. We'll take from the minimum that was right before such an oversold condition, right? Let's turn on the magnet tool. Here was the minimum. We dropped by 44%. Here, where was the minimum? Well, somewhere in this area, yes. We dropped by 46%, right? Now let's keep looking. Here, but in this case, the minimum was right on this candle. We dropped by 39%. 44.5, 46, 39. So we simply assume a drop of 39 to 46%. There's nothing fantastic or imaginary about this. We take the current minimum, right, and first measure off 39%. Here's 39. There you go. That's $36,000. And then we take 46. Well, let's leave it like that. That's $32,000. So from 32 to, I honestly already forgot how much it was. 39, right? Up to $36,000, 32 to 36 is the statistical range based on historical data where Bitcoin could end up. And notice it matches exactly just perfectly with this downside target. Well, I think that's pretty clear. And yes, here it's already being said that from this area, most likely, well, Bitcoin could turn upward. Unfortunately, we don't have the 200-month moving average here because the historical Bitcoin chart, well, in this case, it's the longest one on the Bitstamp exchange, doesn't plot this average for us. There aren't 200 candles here, but we can assume that it lags behind the 50-month average by about the same distance. So if we assume that it goes something like this, then it's already around $22,000 to $25,000. But really, that's just speculation. However, we can actually check these speculations quite easily. Let me show you how it's done. So we take the 100-month moving average and change its periods. Instead of 100, we set it to 170. Maybe there will be 170 candles here. I'm not sure. Oh, look, it's shifted to the 24,000 range. And if we extend it even further now, basically bring it as close as possible to the 200-month average and set it, for example, to 180 periods, then it disappears. Yes, it disappeared. But that's okay. We'll set it to 100. We'll just keep doing it like this now. Look, 179, 178. There it is, it appeared. So that's 23,000. Accordingly, we can assume that the 200-month average is a bit lower, somewhere around $20,000 to $22,000. Something like that. So we could end up there as well. I hope this video was helpful. I don't want to drag out this analysis by breaking it down into even smaller time frames, but as you can see, Bitcoin does have both the reasons and the potential for a further downward move. Yes, At the same time, note that it has already broken through the 50-month moving average several times, but the 100-month, let's actually bring it back since we have 180 periods here. The 100-month moving average hasn't been tested even once, and it is nominally the nearest target, around $40,000. Hugs and kisses to everyone. Subscribe to the channel and leave your comments. Although you're probably already subscribed if you're watching this video. Goodbye.